Accelerated computing has reached the tipping point. General purpose computing has run out of steam. We need another way of doing computing so that we can continue to scale, so that we can continue to drive down the cost of computing, so that we can continue to consume more and more computing while being sustainable. Accelerated computing is a dramatic speed up over general purpose computing. And in every single industry we engage, and I'll show you many, the impact is dramatic. But in no industry is it more important than our own. The industry of using simulation tools to create products. In this industry, it is not about driving down the cost of computing, it's about driving up the scale of computing. We would like to be able to simulate the entire product that we do completely in full fidelity, completely digitally, in essentially what we call digital twins. We would like to design it, build it, simulate it, operate it completely digitally.
At the heart of our investment strategy lies a commitment to identifying and nurturing big ideas, those transformative businesses that not only thrive on disruptive change but also possess the potential to become robust platforms with significant network effects and compelling unit economics. These are the ventures we believe will not just grow, but scale massively in the years ahead. In this rapidly evolving landscape, the concept of scalability takes on new importance as we witness a monumental shift in computing from the traditional, linear models to a new era marked by accelerated processing power. It is within this transformative context that we recognize Nvidia as a pioneering force. Standing at the forefront of one of the most significant technological revolutions of our time, Nvidia is driving the transition towards accelerated computing and playing a crucial role in ushering the early applications of generative AI into the mainstream. This positions Nvidia not merely as a participant in the tech industry's evolution but as a central architect of its future. Since November 2021, Nvidia's stock trajectory has been nothing short of a rollercoaster ride, encapsulating the highs and lows of a technology giant at the forefront of innovation. In November 2021, the stock was trading at a robust $347, but by October 2022, amidst broader market uncertainties and tech sector volatility, it dramatically dipped to $108. This was just before the advent of ChatGPT in November 2022, an event that marked a turning point, reigniting interest in AI technologies and their potential. By May 2023, Nvidia had recovered to its November 2021 level of $347, demonstrating resilience and renewed investor confidence. The story didn't stop there. By January 2024, the stock had surged to $490, representing a 41% increase since November 2021. As of May 2024, the stock reached an astounding $900, reflecting a monumental 160% gain from November 2021. This remarkable ascent underscores not just the cyclical nature of tech stocks but also Nvidia's central role in driving forward generative AI and other cutting-edge technologies. Investors who held on through the turbulence have seen significant returns, highlighting the potential rewards of investing in companies that lead rather than follow in times of transformative technological shifts.
This, as you know, was First Contact. 2012, AlexNet. You put a cat into this computer, and it comes out and it says, cat. And we said, oh my God, this is going to change everything. You take 1 million numbers across 3 channels, RGB. These numbers make no sense to anybody. You put it into this software, and it dimensionally reduces it. It reduces it from 1 million dimensions. It turns it into 3 letters, 1 vector, 1 number.
Many observers draw parallels between the current AI rally and the dot-com bubble of the late 1990s, invoking cautionary tales from that era. For instance, Consider Microsoft's stock performance during the dot-com bubble. In September 1996, it traded at a modest $8, but by December 1999, the stock soared to $60, a staggering 750% gain. However, the bubble's burst was unforgiving, as Microsoft's stock plummeted by 66% to $20 by December 2000. It wasn't until 2016, 16 years later, that Microsoft's stock would revisit the $60 mark. This historical perspective raises a pertinent question about Nvidia's future. Could it, too, experience such dramatic fluctuations? While nothing in the stock market is guaranteed, investors and analysts alike rely on calculated guesses based on market trends, technological advancements, and economic indicators to navigate the unpredictable waters of stock investments.
And so we imagine that this is a completely new way of writing software. And now, today, as you know, you type in the word CAT, and what comes out is a cat. It went the other way. Am I right? Unbelievable. How is it possible? That's right. How is it possible you took 3 letters and you generated 1 million pixels from it, and it made sense? Well, that's the miracle. And here we are, just literally 10 years later, where we recognize text, we recognize images, we recognize videos and sounds and images. Not only do we recognize them, we understand their meaning. We understand the meaning of the text. That's the reason why it can chat with you. It can summarize for you. It understands the text. It understood, not just recognizes the English, it understood the English.
Over the past 2 years, Nvidia's business performance has been nothing short of stellar, distinguishing itself from many other stocks that soared on speculative metrics during previous technology rallies. During the dot-com era, many companies were valued on novel, often unproven financial metrics such as peak multiples on peak eyeballs that led to inflated stock prices. However, the rise in Nvidia's stock price has been underpinned by substantial, tangible growth in revenues, earnings, and cash flows, not merely speculative multiples. By the end of 2023, Nvidia's price-to-earnings (PE) ratio stood at 24.7, climbing to 35 by the end of the first quarter of 2024. This valuation, while open to debate regarding its affordability, is markedly different from the triple-digit multiples seen during the dot-com bubble.
The reason why we started with text and images is because we digitized those. But what else have we digitized? Well, it turns out we digitized a lot of things: proteins and genes and brain waves. Anything you can digitize, so long as there's structure, we can probably learn some patterns from it. And if we can learn the patterns from it, we can understand its meaning. If we can understand its meaning, we might be able to generate it as well. And so, therefore, the generative AI revolution is here.
Despite the inherent cyclicality of the semiconductor industry, Nvidia's trajectory extends well beyond typical market fluctuations. At the GTC 2024, Nvidia showcased its deepening role in generative AI, which highlights its potential for sustained growth. Innovations like the new Blackwell GPUs and Nvidia Inference microservices are not only advancing AI capabilities but also solidifying Nvidia's position as a pivotal AI platform. Given the early stage of AI adoption and its potential to redefine productivity, we believe Nvidia has room to grow, potentially reaching or surpassing a stock price of $1,350, a 50% increase from its current valuation. This optimism is grounded in Nvidia's strategic position at the heart of a multi-decade technological revolution.